Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Krebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
As we get things started today, livestock slaughter numbers came out yesterday. Today was a big day. July cattle numbers, cattle inventory numbers, cattle on feed numbers, cold storage came out today. We'll talk about that next week. But to kick things off, let's recap what happened this week in the markets.
Yeah, in cattle markets this week, we had fed cattle that was down $1.40. Those feeder cattle auctions this week were anywhere from steady to $4 lower on the week. On the future side, the August live cattle futures contract was up $2.20. And we saw the August feeder cattle futures contract up a little more than $5. I think that had a little bit to do with September corn futures that lost 44 cents this week. On the beef side, the choice box beef price gained $1.65. I just want to make sure I highlight that we now are talking about box beef prices that are $4 above year ago levels. So although we started the year below, it's nice to see that choice box beef price higher. I hope it translates into higher cattle prices. On the hog side, barrows and gilts were $1.65 higher this week in cash markets. The August lean hog futures contract was up strong this week, up $8.65. And the pork cutout value was also stronger, up $6.15. Bellies really led the way, but there was strength across the board in those components on the pork side.
It's interesting watching what's going on the cash side of things. We talk about the cattle side of things on a regular basis. We don't necessarily always get into cash hog numbers, but they've really steadily and consistently been rising week over week. And we're at some pretty impressive levels in terms of cash hog prices.
Yeah, for sure. And I think this all points back to the fact that we're producing pork at a much slower rate than we have for a few years. So I think the supply side has gotten in better shape. And, you look at, not to get ahead on livestock slaughter, but you look at production that last month was just about where we were a year ago. Strong. I think there's some strong demand there, but also we're cutting the supply growth a lot on the pork side of the equation.
Let's take a look at weekly slaughter numbers before we get into those livestock slaughter numbers as we take a look back at cattle and hog numbers for the week.
Yeah, so for the week ending July 23rd, USDA is calling for a run of 665,000 head of cattle. That is down 9,000 head from last week, but 10,000 head above where we were a year ago at this time. And on the hog side, a run of 2.285 million head of hogs this week. That's up 30,000 head from last week's run, but 40,000 head below where we were a year ago at this time.
When we look percentage and change year over year, how are we sitting?
Yeah, so we see cattle slaughter that's still up 1.1% relative to a year ago, year to date. And the pork side of the equation, hog slaughter down 3.8% year to date.
Livestock slaughter came out yesterday or Thursday. We're actually talking on Friday, so to make sure if folks are viewing this later, it came out on Thursday. As we take a look at those numbers, Scott, really, you talked a little bit and previewed a little bit the pork side of things, but man, that was a big, big month for June for beef.
Absolutely. So another record in terms of June beef production, 2.453 billion pounds, the highest ever for the month of June. Is what we just put in the books. That's 2.2% above where we were a year ago at this time. And when you look at the year-to-date production numbers, we're up 1.6%. Now, I think, we have to remind ourselves on the beef side that beef cow slaughter has been up, as we've talked about some liquidation, and we'll talk about further as we go here, but been important to that record large beef production number. Now, on the hog side, or pork production number, we are up 0.1% for June of this year relative to a year ago, despite the fact we're down on hog slaughter 1.3% in June relative to the previous year. Weights were up 1.4%, so that got us a little more pork production. When you look at year to date here on pork production down 3%, and that's back to my point of I think that's been helpful to some stronger hog prices that we've seen.
Scott, as we talk about those hog weights, just briefly, are we kind of surprised, especially in the summer months, to see them tick back up what they did?
Yes, so perhaps, yes, a little bit. I will say also surprised to see them tick up with high feed costs. Normally we talk about maybe trying to get those hogs on the truck a little earlier when we're paying $6.50 for corn, but we seem to be pushing those weights in front of us. I think it just keeps reminding us genetics keep getting better, and that has a little bit to do with this trend of continuing larger slaughter weights on the hog side of the equation.
All right, let's get into that July cattle inventory. For those that may need just a small reminder, semi-annual report comes out in January, comes out in July. This is our July report. And really, I would say not any major surprises, anything that wasn't expected so much in this report.
Yes, so I think it's really, Megan, confirmation that we're continuing the liquidation phase of the cattle industry. And I think weather has something to do with where we sit here today. Not exclusively, but important to the mix, especially as we're getting drier in places like Texas, Oklahoma, Missouri, Southwest Missouri at least. But when you look at what we got out of the report that came out today, so total beef cows down 3.4%. 2.4% relative to last July. Overall cattle inventory down 2%. Those all coming in pretty close to pre-report estimates in terms of those averages. Beef heifer replacements that down 3.5%. Tells me that we're not holding heifers back to try to get in the herd at this point in time. I just keep looking and I go, we're going to continue to talk about fewer animals, slaughter-ready animals, as we get further in the year. Now, USDA also did a little bit of revisions to last July's report. Maybe most importantly, beef cow inventory was revised down 200,000 head relative to what the original report would have said.
Before we talk about potential market implications that come from this, I want to talk cattle on feed numbers too, and we can kind of maybe lump those in there together because I don't think that it's going to change how we look at markets through Q4 of this year and into the first quarter of 2023 and beyond. So let's talk cattle on feed numbers first.
Yeah, so we still have ample supplies of cattle on feed. When you look at July 1 on feed numbers, they were 100.4 of a year ago, so still fairly large inventories on feed. Placements on feed, all right, so we had a fairly large pre-report estimate all the way from 89.2 to 99.5. It's a little easier to fall in the middle of that when you have such a large range. But the actual came in at 97.6 of a year ago, so fewer placements in June, maybe not quite as much of a decline as some pre-report estimates would have suggested. But again, confirmation, I think that we're going to continue to see some lower placements going forward. It'll take us a while to get on feed inventories down, but one could look up next year and talk about a very different situation than what we've come through thus far in 2022. So we're going to get tight in terms of cattle numbers. I don't care what you look at in terms of these two reports today, but they all spell disinvestment. When you look at the percentage of heifers on feed, it's 39.2% of total on feed were heifers. All of that tells me we're not holding heifers back. Yet again, just like the cattle report tells me, we aren't holding younger heifers back either. So there's nothing here to me that signals we're doing anything other than liquidating. And yes, weather has played a role here, but I think some lack of profitability has also been important in some cases.
Obviously, it takes a whole lot to turn that ship, very different than it does in other species. Could we start to see, maybe it's in that January cattle inventory report, maybe if, and this is a whole lot of like, let's look at your crystal ball, weather conditions improve, we see a better picture setting up on the grain side of things, that we could see producers saying, okay, I've liquidated some or much of my herd. Maybe I'm going to start to keep some back, or I want to start to get back in. How soon could that potentially play out?
Yeah, so I don't see us when we do January 1 counts for 2023, anything other than further cuts in beef cow inventory. I think one of your assumptions of better weather is already a card played. We don't have better weather, so it's even if things do get better as they could from a weather perspective, I think it takes us a while to turn that ship back in the other direction. So at best we got to get probably January 1 of 2024 to even start to consider some type of growth. And I don't see much incentive for that right now. So I think we're in this mode for a period of time, and could end up with some very nice run-ups in terms of cattle prices. I hate to be too optimistic for folks, but again, we're going to just be in a very different situation than the last few years that we've come through.
What does that potentially do for demand? Because in our current economic position, I would not think that super high beef prices on the retail side of things does great things for our ability to keep moving product.
Yeah, so I think we want to be cautious and know that that's at play. So I go at it this way. So we can get some retail price information from Agricultural Marketing Service of USDA. And I think this tells an interesting picture. So when you look at current week retail prices reported by AMS relative to a year ago, for ground beef, and I picked 90% plus lean, today that price is $5.29 according to the AMS data. A year ago was $4.71. Now, so that increase tells me we're getting some buy down, right? As consumers are more worried, they're purchasing less. Now let's go to a T-bone steak price that today AMS says is $7.21, and same week a year ago was $10.50. So even within the beef framework, we're seeing some of that shifting. Now, the one that bothers me is I can go get center cut pork chops for $2.42 according to AMS today. Last year they were $3.03. And my point is, do I want to buy $5.29 90% lean ground beef or $2.42 pork chops? So there is some of that trade-off that I think is going to happen. I don't mention chicken only because chicken prices have been fairly strong thus far, but I think we're going to have to watch that. Now, this recession to me and consumer demand generally, or this economic downturn, I think higher income consumers are more isolated from the effects of that downturn. They probably tend to be the ones that are consuming the highest quality beef products. So maybe that's the other side of the situation that keeps steak prices higher than otherwise would be the case. But I don't like record prices, which may be where we're headed because of short supplies. And I'd much rather talk about record prices because of strong demand. And this tight supply situation could certainly create some longer term issues for us on the demand side. Is maybe consumers find new products to replace those expensive beef products and they don't go back very quickly, or maybe even more important, restaurants change menus and quit featuring beef maybe as much as we've seen over the last decade or so.
Man, it's definitely an interesting dynamic that's going to play out over the next 6 months to, I'm going to say 36 months. I mean, I don't think we're going to pull out of this super fast in any regard.
it is interesting just to watch how the combination of weather and tough times has made it difficult for any kind of expansion. And you just look ahead and go, what changes the dynamics here moving forward? And again, you could end up with a very different beef situation. It may be decades for all this to play out sometimes, just given where we sit today.
Scott, that'll do it for us today as we look ahead to next week. We mentioned we'll talk cold storage numbers, which actually came out today as well, or on Friday. And what else do we have?
Yeah, so we'll also get the restaurant performance index, and also next week. So it's not often, but Economic Research Service providing us an update on farm production expenditure. So I'm really curious to see how inflation comes through in those numbers in terms of farm expenses.
Scott, have a great weekend. We'll talk to you next Friday.
Sounds great, Megan.
12-hour weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. If you have questions or comments, you can submit those as well. And if you want to take a look at what's going on the grain side of things, check out our counterparts, Will Robinson and Ben Brown, with the weekly commodity market update on Tuesdays. Have a great weekend. I'm Megan Grebner for Brownfield.